Hi and welcome to Random Rodgers Big Picture for the week of November 16th. Just going to chat a little bit about the stock market and a little bit about, I don't know, it's like psychology or sentiment. And that'll be that. So first, the market. If you saw that movie, A Mighty Wind, which is a pretty good movie, you might recognize this tagline, "Wahapa!" The market got wally-whacked late in the day on Friday. I mean, it was down, about 4%, I guess, early on, and then really rolled over big time later on in, like the last half hour or 45 minutes, I guess, in the day. So there's a kind of a few moving parts here that all work against each other in terms of logic. Below 900 is cheap, or I should say is low. There's fair debate about whether that's cheap or not, depending on how you look at PE ratios. There are, in terms of trailing earnings, an awful lot of single-digit PEs out there, which, a lot of people look at that 1982 time frame, that the overall PE of the market was single digits. I don't know where the overall PE of the market is now. I don't really focus on that, but in terms of individual stocks, there are a ton of single-digit PEs. It is pretty easy to grab onto that despite what may be coming, and I'll talk about this in psychology a little bit, despite what may be coming, if you can find a couple of, whether it's individual stocks that won't go bust, that are yielding twice what they normally yield or more, have a single-digit PE ratio, you can make a pretty easy case that they're not going out of business. If you really are a long-term investor, that type of purchase is going to work out for you. And again, that doesn't mean that the S&P, I still think that the low that we've now tested twice is going to be about it. Give or take, I think I said 25 or 30 points, so we could easily go to 790 or 800 in my thought process, and I think that would be within the realm of what I'm expecting. If, though, we go much lower, okay, then if you really are long-term, then all that really means is a bigger hole to dig out of. And, to be clear, I've disclosed what I've done. I'm sitting on, give or take, depending on the client, in the neighborhood of, 25, 30% cash. Some people more than 30% cash. So it's, to be clear, I'm not buying them with both hands, but I am starting to buy them. This is what you do after the market falls 40%. All the great investors, you've read about this. This is what they've done. I picked up one little nugget. I don't remember if it was in the FT, but maybe you saw this somewhere. Maybe it was Seeking Alpha. 12 times the market has had one of these types of events, and only once has the decline been more than 40 to 50%, and that obviously was the Great Depression. It's not as bad, I don't think, as the Depression. Everyone is, not everyone. There's a lot of commentary telling us why it is. It's an awful lot. It's just very difficult to imagine that so many people are going to be correct about it being so bad, just as it's going to be so many people are going to be so correct about a bell ringing. They're calling it on TV the Art Hogan bottom, and it's going to be off to the races. I expect a feel-good rally, not the end of the bear market. I think we were looking at 5, 6, 7 months more. I've been saying late first quarter, early second quarter, 5, 6, 7 months, something like that. More of ups and downs. I'm surprised we don't see more follow through to the upside just because of how vicious the selling has been. All of what I'm saying will either be right or wrong. Who knows? But that is what I think. And there is no convincing me otherwise that selective buying won't be rewarded 5 years from now. You probably need to broaden your horizons a little bit. I'm, far from saying the U.S. is going to be the most attractive place in the world, but some things are going to work. That's pretty obvious. On the other side of the ledger, you get certain things that are making headlines that have had crazy drops. I wrote about this on Green Faucet. Citigroup down 80, I don't know what percent. Barclays Bank, I used to own Barclays. I love that company. I sold it a year ago, well, not quite a year ago. Last December I sold it at 42. It had gotten crushed down to, actually 41.87. It had gotten crushed down to that level, just decimated. And now it's, actually I didn't look at it on Friday, but on Thursday it was trading at $9 early in the day. Or in the nines, I should say. General Electric down 75% or whatever. Crazy stuff is happening. Hopefully it's not driving you crazy, which leads to the next segment, which is kind of the psychology, sentiment, whatever. Tough to say or tough to know what really comes across in the blog post. But I'll trot out something that Charles Kirk brought out earlier in the week in his daily email. It was a quote from Lou Rukeyser, and I'll paraphrase it. I don't have it in front of me. I don't remember the exact quote, but something about whoever loved you a few days ago still loves you. It's just your money. It's, I think, not your health or something like that. We had a situation Friday morning with the fire department, which was gnarly, non-fire related. Chances are you're better off than the situation we went to. From the standpoint of keeping things in perspective, it is just your money. Regardless of how upset or not you get, the market will work its way back. It may take the rest of your life, or it may only take a couple of years. I don't know. But this is what happens. And worrying about it because it's beyond your control. I've used this phrase before. It doesn't make sense to worry about things that are beyond your control. What is within your control? Having a clearly defined plan of getting defensive, when to re-equitize, having the discipline to stick with it, and realizing that sometimes the market goes down and sometimes it goes down a lot, and occasionally when it does go down a lot, people freak out because of it. That's kind of how psychology works. There's white papers on this sort of thing documenting the crazy reactions that people have, and subsequently the very poor decisions they make when confronted with circumstances like now. Rationally, this. So if you know this, that should, in my opinion, help to mitigate it. For whatever, my wife teases me and calls me a robot, whatever, it just doesn't worry me because I have no control over it. I have control over the things I just said and making the effort to do the best that I can with those things. And you have the exact same thing at your disposal. I am no different than anybody. None of you are any different than anybody else if you keep your head about you and realize the stuff I'm saying, because it's true. Even if this is the next Great Depression, which I don't really believe. Alrighty, that's about it. Have a great weekend.